Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, August 19th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to take a look at the overall breadth and scope of activity this week, as well as our forecast for next week. Absolutely no doubt, precious metals closing on a low note today under fairly strong to moderate pressure. Currently, it looks like it's going to close down or off about $12 on the day. Now, basis December COMEX contract, 1344.70. The low today is 1342, and the high, 1357. Spot, 1340 point change, call it, with a low of 1337 and a high of 1352. Lastly, silver trading off about 2% on the day at 1930, just off of a low at 1924. So traders, if we look at the recent activity over the last couple of trading weeks, and that's exactly what we're looking at here. This is a weekly chart. You can see that over the last 2 trading weeks, the market has closed higher than it opened on Monday. However, in both instances, the higher pricing is extremely narrow in that you've got basically stars that occurred in both trading weeks. The market is absolutely consolidating and forming a base in this particular price point, which brings us to our current trade. Now, if you recall, we put this trade on really quite some time ago on August the 9th. The market had just really come off of these lows. This is following that jobs report right in here, which came out on a Friday. On that Monday, we had this doji star form and also hit this low at 1335, which happens to be a 61% retracement. The following day, we had the market move up. These 3 candles formed a 3-river morning star. Our confirming candle here was our actual entry point, which is how we got in the market at roughly 1354. As I said, market's trading against us slightly. We do have a stop. That stop is currently sitting just under 1335 basis December, which will protect us as long as the market doesn't make a lower low, which, as you can see all throughout the week, it has not. The other thing that we noticed was that we're truly getting a compression of range. Really, you can point to a compression triangle. Let's go ahead, pull up another chart so you can see that. And traders, to best illustrate my point, I pulled up this daily chart. We have some trend lines which show this series of lower highs coming in over the last couple of weeks, definitely providing on a technical basis some headwinds. We also have had a series of higher lows. So the market we've seen has been supportive in the area around 1335 to 1340 with these lows moving up a little bit. This, of course, is a compression triangle. And as the range narrows, the philosophy or idea behind this kind of a pattern is that as this range narrows, it builds energy by the fact that it's not moving as far. As it reaches the apex of the triangle, you should get a significant release of energy and a strong break one way or the other. A compression triangle can break in either direction. Typically, we look for that type of a pattern to break in the prevalent direction of trend. And we can absolutely say with some certainty when we go back from the beginning of this year to now, which is 1050 up to 1380, the significant or predominant trend, I should say, has been up. For that reason, I would look to see a break to the upside at some point next week. Maintain your current long position, maintain your current stop. So traders, as far as silver goes, silver under significant pressure this week, much stronger in terms of any kind of a drawdown than we saw in gold. Gold actually closing up ever so slightly on the week, although down on the day. We're looking at a weekly chart of silver, and you can see, as in gold, Last week, we had that defining doji with a slight uptick. You can see that as this green candle. In gold, we also had a following doji candle, as we just pointed out on one of the weekly charts that we showed on gold. Silver, absolutely not the same activity. You can see a pretty strong sell-off, now trading below what I would have looked for as a potential area of support, and that is roughly at around 1950, with the market closing at 1930. I do expect gold and silver to move in tandem, and so we could see a recovery in silver next week. However, if there is continued weakness in the precious metals, look for silver to sell off in terms of a percentage drawdown a much greater degree than that of gold. Traders, no doubt, an interesting week in all of the markets. When we take a look at U.S. equities, we have seen the equities themselves close slightly off on the week, definitely down today. Dow Jones Industrial Average closing off about 45 points at 18,552. Standard & Poor's closing off about 2 points at 2181. And lastly, the NASDAQ. Of course, we're looking at the NASDAQ 100 E-mini futures, but the NASDAQ has really outperformed the rest of the equities markets, and in terms of the sectors themselves has been the most productive. You can see this dynamic move up. We have 1, 2, 3, 4, 5, 6, 7. This being the 8th week in a row that this equity index has closed higher on the week. Even though we closed a little bit lower on the day, this has been the stellar performer of the equities group. Considering for the most part, it was certainly not a risk-on week, with U.S. equities trading under slight pressure after really seeing us climb to new historical highs over the last couple of weeks. Precious metals also under pressure this week. But the one real breakout that we have seen has been in crude oil, really a significant move over the last week and a half, as we've seen a climb from about $39 back up to where we're trading at right now at about $48 per barrel. So traders, absolutely no doubt, a significant week in the precious metals markets, really closing under some fairly strong pressure, trading off about $13 on the day. We have a long position at $13.54. Market's currently at $13.44, so it's roughly $10 against us. We do have protective stops. Those protective stops are sitting below the recent lows that were achieved last week at about $13.35. My sense is, as long as we can stay above that price point, we have been building a base, first of all. Second of all, we've definitely identified a compression triangle in which we see the range narrowing between the most recent set of lower highs and higher lows. As we approach the apex, I do expect a significant breakout. I believe that will occur next week. Typically, we will see the market move in the predominant direction of the current trend, which absolutely long-term has been up when you consider that this market at the beginning of the year was trading at roughly 1050. Anything is possible, though, with statements that could come out of Jackson Hole and any kind of statements made by Janet Yellen next week. I can tell you we will probably see some increased volatility. We could certainly see some fireworks. Maintain your current long position. Maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.